Hi everyone, Stuart here. It's Friday. It's August the 15th. It's a big holiday in many countries. Assumption, Inde- Independence Day from 1947 for India from the from London, the the British Empire. India's obviously gone on a great thing since then. So if you're enjoying your holiday today or a holiday today, um, have fun. Good luck. It's obviously a big day in the markets. We've got quite a significant data point coming up in about excuse me, 8 minutes time. Excuse me. I've just tried to eat something before I came on live about 20 minutes ago, and it's stuck in my throat. So excuse me. I've got a diet coke here, which I don't really like, but Coke Zero. But it's a hot day here in London again. So anyway, hope you're all well. Take care. And obviously, if you've got any questions, stick it in the box. Solanke, I think, has joined me, or he did join me. I don't know if he's still here. He's disappeared for some reason. Hope you can hear me today. There was an issue with the microphone yesterday. I hope everything's well and you're doing well. I've started with the gold chart. This is gold. Hang on, let me move my ugly mug out of the way a bit. There we are. Uh, the gold chart here. Interestingly, yesterday in the aftermath of the PPI, the hot PPI reading, gold pushed down to this level we'd pushed down to on also on Tuesday when we had the CPI reading as well. So we went into this 3330 zone, 3,330. We've talked about for gold. Rallied in the afternoon in the US session. Now we've come down again this week. Gold trading chart would have gone long here. It's been stopped out here at 7 o'clock this morning, and it's been short ever since. Stop loss would have been up here, and it's still short, but it's chopping around. I mean, it's obviously lots of data, lots of significant things impact gold today. None more so than Trump meeting Putin later on tonight, my time. Later on in Alaska time, it's about 1 o'clock Alaska time. All sorts of things on the table, all potentially market moving. But the main data we've got today for Friday, the 15th, it's Assumption holiday, Independence holiday in India, Liberation Day, South Korea. I know lots of my colleagues in East Europe are on holiday as well. It's celebrating the Assumption Day. We don't do that in the UK. Let's just come down to what's coming. Core retail sales. So this is used to be very significant, the retail sales number. It's less significant. It's still a three-bull high-impact event. Don't get me wrong. But it's less so than it was a few years ago. But lots of other US data coming on today. None more so than the University of Michigan consumer expectations and consumer sentiment and their inflation expectations. So there's a raft of data out of the US today, all ahead of Trump meeting. I don't know if he's actually put it in the calendar here. Trump meeting um, Trump meeting Putin later on. It's not actually in there as an event here on the investing.com calendar. So core retail sales. Has this been hit like we saw with the big hit we saw for PPI yesterday? So this will be interesting. Has this been significantly downgraded on the back of that? Earlier this morning, we've had this weakness in Chinese consumption and industrial production again. I mean, the Americans all and the markets also, treat the Chinese data with a little bit of a little bit of a pinch of salt. But it's still showing deflationary situation in China, and expectations now rising for some significant stimulus from the Chinese government. Stocks rallied today in China and Hong Kong on the back of that. On the back of that weak Chinese. Gold is down. We're at 338. Dollar is obviously just waiting. I mean, most markets are waiting for what comes out of Alaska. But Euro 116.85 at the moment. It's been rising this morning here on the hourly chart. We went into 116.38 yesterday as we came down from the PPI data. There's the 1 o'clock candle, and we continue to move down into sort of the close here in London. I didn't get as low, interestingly, to that 116.07 area we'd got to on CPI day, so it was a bit higher, and so we've managed to move. What's that white line coming on there? I don't know what that white line is. 200 moving average. Actually, let's change that. The colour on that one, I didn't realise that was in there. But anyway, into the 200-hour moving average, there you can see that white line. I don't know why that's on and off. I don't know what's going on there. But there we go. So we're up. 116.85 has been recovered again. It's an area we were talking about yesterday for the euro. So this hourly chart would have been long from the start of the European session here this morning at the 6 o'clock candle. In fact, an hour earlier it was the minor breach, but you would have added to it there on that low area we talked about yesterday at 1670. And excuse me, we are long. So note to self, don't eat less than 20 minutes before you're going to start talking to people. So excuse me for that. So euro up this morning against the dollar. Aussie also back over the 65 handle this morning at 65.10. CAD having a go at 138 again in the last hour or so, having come back down through there as the dollar's weakened yesterday. Yeah, it's the hourly chart. Yeah, and then again this morning we've moved lower again, and we're ticking back up. So our dollar ticking back up against CAD. For some reason, why are my markets moving? It's saying this isn't great. Let me just try and close some of these things down. Let's get rid of that. Don't know why I would have lost my connection. Hopefully we're back. Get rid of that. Don't need that. Look at that. So look at that. Let's go home. Let's go close lots of stuff down. It's in my calendar. So anyway, let's see what the the data looks like. That retail sales data in a minute or two. So let me just get up another. My other feed, which is working here. That's all right. That's all right. Okay, so obviously, yesterday we had this talk from Scott Bessent, the Treasury Secretary, who's actually on the plane with Putin, as you might expect. So he's looking. So two of his business people, as well as his chief diplomat Mario Rubio, I should say. So yeah, we'll see how what obviously comes out of that discussion with Putin. So Scott Bessent talked about 100 basis points cut from here, possibly 150 basis point cuts from here. And then he sort of backtracked and he said, perhaps if the data from non-farm payrolls this June and May data has been correct, if it is correct, we could see this bigger hike, this 50 basis points hike in September. That's the chance of that has been sort of stepped back this morning. So the dollar sort of sunk on that move this morning. So key date point, this retail sales, less so the Empire State manufacturing numbers, but again later on the sentiment numbers, which really drove this initial run on the dollar. So the Michigan data later on will be really quite key as well. So let's have a look what that's looking like in a minute. Let me just bring up my factory calendar. See if we can. Well, working that sounds on there. So retail sales PPI. So we have dropped. So core retail sales has come in as expected, 0.3%. Last month, interestingly, again, this is idea of this front running. So let me just let's just refresh this all for you. So for today, It's going to get a lot of. um, Where are we? Here we are, the 12:30 data. So core retail sales has come in as expected, in line with expectations. So export price in line with expectations. Import prices tick higher. You'd expect that. And a front running of the retail sales. So that's been revised high to 0.8% for June. And state, the Empire State, much stronger than expected. Was expected to tick into negative control area. It's come back close to 12, so that's positive as well. Control group 0.51%. That's in, yeah. So that's much more benign set of data than we've seen from certainly the PPI yesterday, as far as the dollar's concerned, as far as pressure on the Fed's concerned. So um, retail sales. Let me just recap. So retail sales for the month, the three has come in at 0.3%. So it's holding up in July. Obviously, suggestion. Obviously, it's quite a significant decline. So 0.5 to zero point 0.3 is obviously less significant than the zero point 0.8 to zero point 0.3. So we've had an upgrade for June. Will we get an upgrade, or will we get a downgrade for July when it gets refreshed next month? So again, you can interpret that the impact of tariffs is in play, but it's in line with what the market was expecting, the 0.3 of 1% for the month. Exports the same, and it's not, that's the core retail. The headline retail numbers 0.5 of 1%, so that's a little bit hotter. And the year on year is coming in at 3.92% from 4.35%. So again, suggestion that the tariffs are starting to have some sort of impact, given that there's evidence here of this front running of the tariffs. So all the previous data has been upgraded. Says, retail sales taken out cars 0.8 of 1% from last month, 0.21% this month. Manufacturing sales positive rather than the decline we've seen last month, and that's actually got worse. So again, it's a bit of a mixed. Oh, that's Canadian data. Sorry, I'm running too far ahead. But just on that, I mean, that's another negative tick for the Canadian data, and for Mr. Carney of North in Canada. But as far as the US is concerned, that's relatively okay, sort of reading positive for Empire State. Let's have a look how we've changed dollar CAD. So dollar up against the Canadian dollar, you'd expect on that set of data. And indeed, there we are. It's the 5 minute time frame. So data's just dropped here now, and we have reclaimed that 138 area we were talking about for the dollar against the Canadian dollar. So we've been looping lower all morning. That's classic moves lower, higher, lower highs, lower lows, and then the data drops and we move higher. First indications here at quarter past one. Then the big candle there at 5 minutes later, and then the data breaks and we move higher again. So a nice breach of 138 is what we'd be looking for Canadian dollar CAD bulls. A break back below this 50-20 confluence here at 137.93 and a half for dollar CAD. Euro again would have moved to the opposite direction, to downside, as the dollar's improved. And again, another one that's here. You can see the 5 minute chart. We've been looping higher all day, all the Asian session, all the European session, and then look at that triple high, triple top on 1692 from 11 o'clock. So we got 11 o'clock high, 12 o'clock high, yeah, 12:45, and then that must have been 1 o'clock, yeah, so three. There's classic sort of measured control by the markets ahead of the data, and in August as well. So 116.91 was the line in the sand for the players for euro dollar this morning. Down we go. Data comes out. How low can we go? Or will indeed we go lower? Or is it just a shakeout? And that's our next upside target. So that's your next upside target. If you're going to go long this one, 116.90 euro dollar. The step to the downside took us to 116.73. So we've got a 20 pip range on the major data of the day so far. There's still plenty of US data to come, so don't get too caught out with that either. But let's have a look at the. You can see here. Mm, okay, the Empire State. Better than expected this month, positive from a negative, and also positive last month from four consecutive negative months on the. Just talking about the Empire State here. So it's was expected to be negative. It's been positive this month. It was positive last month. The four previous months from that was all negative. So relatively good data there, and it's the best reading for the Empire State since back in January, I think that is, isn't it? We've had the euphoria of no November, in fact, the euphoria of the election and Trump's victory. Yeah, so that's quite a good reading. And again, administration will like that data coming out of New York, the wider state, 11.9 for the manufacturing sector. So again, they could argue some signs of improvement in that key zone geographically of the country for manufacturing. So 11.9 is positive, and that's helped lift the dollar this morning. Interesting callback. So there we are. Our target has been taken out. So we've already rallied backwards. So the initial move was lower. Um, Literally 5 minutes later, we've moved to the upside. So dangers of trading the news, my friends. Let me show you a classic example of that. On a day, sorry, in August, when markets are quite thin, volumes are quite thin. There's some very fixed uh, rules in the trading rooms. This was obviously don't breach this zone ahead of the data. If you want to buy, wait till the data is, you get a better price. And so obviously the players, I'm arguing here, would have been buying down here as we've moved into this low zone here. So the London low here, and it was not the London low. What am I talking about? It was at 9:30, so the open was back here. So early trades down here at 7 o'clock at 116.68. That's been bought. We've gone into that zone here through 116.75, and that's where the buys have been placed. So there've been obviously bids placed here at 116.75 this morning from here, rallied first down and then big burst through to produce a new high of the day. So dollar initially moved positively and turning around very, very quickly in the subsequent 20 minutes. So 116.90, 116.92. So obviously brings in 117 to the upside for euro. This is the 2 minute charts as well, remember, guys. So again, you can put on the um, time zone when uh, you're not allowed to trade. It's this area here. So we were down on conclusion of that. That still looked quite weak, but that's been bought out. So if you've gone short here, you've been stopped out, and that's immediately turned long there at 2 minutes later at 13.36, and then through the 50 period moving out very flat. No real trend there. So careful trading. This is a little directionless. But the bias, as we said, we always say, where was the bias? The bias is to the upside. That was our European high, and we've gone through it 116.90, that zone we talked about, right at the top of the shop. So euro back on the front foot against the dollar, 116.99, 117 looks inevitable, or as it would have been taken out. So again, many that had got this low at 116.75, we happen to take that 25 pips out of the market here on a Friday afternoon. Certainly in London, I know we lots of people closing their accounts. But there's still, as I say, there's still some significant data to come out of the US later on today. So wholesale, we got these industrial data, the manufacturing production, which was so relatively weak in China. We saw this morning, and then I say the University of Michigan data in an hour or so, rig count, and then the CFTC data. But really, all eyes on that Air Force base, that our US Air Force base in Alaska later. What will Putin walk away with? I mean, just the fact he's got to meet a president on US soil. There's many, many countries he can't go to. He'd be arrested if he landed in London. He'd be arrested if he landed anywhere in Europe. Putin. But there we go. He gets to go to America. He gets to speak to a president face to face. First time that's happened on American soil since 1988. Generation and a half ago, my friends. Historic meeting of two characters, shall we say. Uh, Autocrats, both of them potentially. So, what else is going on? Well, stocks were stronger again this month. So, euros up. If the dollar's weakened again, that would have lifted the stock markets. A lot of volatility. It's a 2 minute time frame. So let's just see what we were doing this morning here in the futures market. We were that's no, that stopped me out. I might have pulled that up a bit too close. Is that 1 o'clock? Yes, it is. Isn't it? 1 o'clock. Oh, no, it was yesterday. One time. I have to pull this up this morning. So sorry. Let me just go back to the daily time frame. So this is a long position we've had on the S&P 500 since the 6th of August. We've been cranking it up. Our initial target was hit earlier in the week, and then we've moved our stop loss up. So we've had a strong day here on the 12th, earlier in the week. Less so yesterday, we were flat. We were up, say, on the 13th, 20 odd points. The 12th is a big move. We were up 72 points, wasn't it? The 12th, that's right. That's the 12th, isn't it? Yeah, 12th. And so we've cashed in half of our position, and we're still long this one, and that's where our stop loss is now as we go forward. So there's a 4 hour time frame. Our stop loss was pulled up after this spike down into really nearly stopped us out, but as it went back to T1, we moved our stop loss up. It was just under T1. Literally came within points of getting taken out on that. And now we've moved up, and I might move this up a wee bit more again, looking some more. So 647 or 646.68 is the stop loss from our entry back here at 630, 6342. I think we filled at 6340 actually on the trading point. But anyway, that's nicely in profit. That's still moving higher. Nasdaq is the same, moving up. We've rolled over a wee bit. Again, it came within points of taking us out yesterday, but we've moved that up now, and that looks like a bit more vulnerable than Nasdaq to the downside. Nasdaq got hit a bit yesterday, but we've had this news as well of this bizarre news that's flying around at Intel. The US rumors, I think it was from Reuters, broke the news, or maybe I can't remember if it was Reuters or Bloomberg, that the US administration may take a stake in Intel to protect, basically, or get them to, continue to invest into the United States. So these things, for national security, these chips that Intel produces or producing, the government trying to take a stake in it and making it one of theirs. So government investment. Who'd have thought that? In the United States, government's investing in free enterprise. But anyway, there we go. That's lifted Intel. It's up another percent. This one, 1.2%. It was up 7.38% yesterday. And remember, the CEO, it was only I think it's about a week ago, isn't it? Trump had said he should resign because of his conflict of interest, because of his exposure and investments in China in the past. But they met face to face, and unsurprisingly, not for the first time, President Trump has changed his mind off it. And there's nothing wrong with that, new information, change your mind, meet the guy. He obviously quite liked him. Obviously, just it's very, very Trump, isn't it? Some people love him for it. It drives policymakers mad, I would guess. Anyway, Nasdaq remains bid. The Dow has recovered much more. Well, it was down more significantly, but it's recovered more significantly as well this week. So We haven't actually got a position on the Dow at the moment. We got lots. We did have lots of open positions this week. I'll update everything after this. We've had. I'm just counting my closed positions this week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 closed positions. Quite a lot of small losses this week. CAD, Euro. CAD was minus 15. Euro minus 35. Minus 21. We went against the grain. Swissie again, another minus 20 euro, another minus 17. We sort of caught them, but we did get a big run. Pound yen was plus 90. The Nasdaq earlier in the week was 188 points. S&P plus 44 points. So I think we're in the money for the week. We were in the money marginally last week. It was only 100 points, but it's all, I haven't been paying that much. I do pay attention, but it's one of those sort of periods. But Dow, yeah, moving higher, and it's again, it's joined the S&P and the to new all-time highs today. So it's on Tuesday and Wednesday we had consecutive days of all-time highs for the S&P and the Nasdaq, and now the Dow is playing catch up, and we had a strong day on Wednesday for the Dow. Good day on Tuesday as well. Strong day on Wednesday, and then we followed through yesterday, and we're up again today. So new all-time highs for the Dow, 45,180 there. So crypto very volatile, but we still bid 118,000. Remember yesterday we'd gone earlier in the day to 124,500, new all-time highs, and then sold off really aggressively. But where do we go? Well, we came into this previous resistance area. It's the fib level, isn't it? That's our 161.8 extension level, which sits right on that 118,000 level. And I will say we're still we'd have long there. We'd have, I mean, technically on an end of day basis, that would have taken us out and given a lot of our profits back on that huge engulfing down candle yesterday. But this is the perils of trading the cryptos. So that down candle yesterday, huge 1, 2, 3, 4 previous days being completely engulfed by the sell-off into the 20-day moving average, which still made me smile. We bounced off it today, and we're back at that key fib, that 161 fib extension level at 118,800. So still fairly comfortable to be happy to close out that initial rally and perhaps be adding today, see what the weekend brings. 123 was taken out, and that's our new all-time high, 124,544 Billy Bitcoin. Ethereum's doing even better. Those of you that trade it and follow it, 4,600. What a remarkable blowout run this has had. And again, these parabolic moves for Ethereum. Technically, squeaking into the overbought area again this week. Looping Matt D signal and Matt D and signal lines. Short there into the 20-day, then bouncing off, then breaking through. There we go. See classic moves here. That was the first heads up as we went back over the 5 and the 9 recrossed, having tried to go short here. So the 7th was the first indication, and then we had a nice candle pattern there. 3 white soldiers, as we call it, three similar sized bodied candles of substantial move. Cooled for a couple of days, and then a big blowout again on the 12th for Ethereum. So Ethereum fans, big blowout from this July concentration level. So classic, moves here. Big leg down, consolidation, parabolic leg up in back to the 2,500 levels. Consolidation through here through June and July, and then the breakout of the zone. And then it's been added to on the big candle ranges. Slight dip into the 20-day, and then another breakout here from the 7th of August. So it's been a good 2 months for Ethereum fans. 4,600 we trade at the moment to the upside. So trade what you see, not what you think. Oil continues to be weak. We've been weak on an end of day. I didn't post this on here, but we've been adding to our shorts on oil on an end of day platform, on a different trading platform. But yeah, that was the break, that big gap. I think we have mentioned this here before on the fourth, where we gapped lower. Looked like we were going long, couldn't break $71. Uh, Big up and down. It's always negative configuration. That was a tweezer top as well as the top of this 3 day rally. Interesting, you see how the third candle there. That's not a three white soldiers, simply because the third candle is much smaller than the previous two. Looked relatively positive even on the end of July, but it was the end of the month. Again, we came down on the final day. Looked like we were cooling. Looked like we might have held $70. Didn't happen. We started the new month weekly, and then we breached the 20-day here on the fourth. Been short ever since. And that um, was looking to close out yesterday. It didn't, because it didn't get back through the middle moving average. Remember, I trade this strategy. We use the middle moving average as our stop loss if when we're trailing it down, or we use multiple of the ATR. The ATR at the moment, $2 a day, typical move. So we're still moving down. We went in to test $62 on the 13th. On Wednesday, we rallied yesterday quite significantly. Like I said, I thought I might have stopped out yesterday. It hasn't. When we're lower again today. So 63 is our support going into the weekend for US crude. We had that big a bounce back in inventories earlier on in the week as well. US schools actually went back yesterday as well. So US schools are back as of yesterday. Teachers are all back anyway. But yeah, oil continues to move. So holiday season coming to an end in the US. We're all now looking forward to quiet at 2 weeks in at the end of August, Jackson Hole next week, and then the Labor Day holiday on Monday, the 1st of September, and everything gets back to normal significantly. Then, where are we? Yeah, indexes we were talking about, weren't we? So, yeah, to the downside. So, there's a lot of noise going on outside. I don't know what's going on here. Where was I? Yeah. So, any questions, guys? Christian, what you're asking for, Christian? We can't see your screen. There's blue only. Oh no. Oh no, that's not good. That's not good at all. Helps. Replace screen sharing. Right. Well, it looks like it's sending from here. I don't know if we've had a glitch in Christian. I don't know if you're still here. I don't know if we've had a glitch in the internet or something. But blue screen's no good. Somebody else private chat. Oh, he's gone. Oh, it's a shame. I've been talking. You can hear me, but you can't see my screen. What about now? What's a bit of a delay in what's going on? Let's try that again. Let's bring in the calendar. Well, you can see it looks like it's going from here as far as I can see. Let me just check my settings. Video, webcam, my definition, background on audio. The audio yesterday. Today it's the video. It could be the vagrancies of the hot weather in London, the vagrancies of August. But if you can't see my screen, it's a bit. Can you see me? Which is even now it's up and running. Okay, it's just a bit of a refresh. Thank you, Kristen, my friend. That's very good. Thank you very much, my friend. So as I was saying, oil, this crossing EMA strategy has been short from the 4th of August. We went into $62 yesterday. On Wednesday. Bounced significantly yesterday following the big inventories, but we're down. It will weaken again today. Our stop loss is at here at 64.40, and we've been short since above here at 66.60. Anyway, that's oil. I know a lot of you don't trade oil that often, but let me know what you do trade and what you're interested in trading. As I say, we've had quite a lot of trades. I will update them before the week's the week's up, because I was conscious I'd missed the last 2 weeks of July. I think I sent. Did I send? I can't remember if I sent August data first week of August. It was very quiet last week. We made 107 points from 5 trades. Um, and then, yeah, there's only 5 trades last week. Pound CAD, Aussie CAD, Kiwi, Swiss, dollar, Kiwi, and pound yen. But it's been the two stock markets that have kept us in the money this week. So where was I? Indexes for majors. I think I'm a bit done for here. So let's just come to next week and what's going to happen for the rest of today. You could imagine if we just go back to the euro as a barometer of what's going on. Obviously, it's reacted to the data here. Let's just take the hourly chart now because obviously it's reacted positive. There's that move down into the classic move. Right into the 20-hour moving average. It was already positive before the data came out, so that would have, again, the hourly traders on euro dollar would have been long ahead of the data. There might have been. If you're trading this on literally with this strategy on this hourly time frame, you close. Certainly, I do. I close out for the major news and then see how the market reacts on my time frame. So I'm long here on the hourly. The 30 would have been long as well, except that would have gone long a bit earlier. It would have gone long there at 2 o'clock this morning if it automated. I'd come in 3:30. Certainly, say I'd come in at 7 o'clock this morning or 6:30. That would have been enough to get me in because we're over the 50 period moving out here on the 30. And then just trail my stop loss up and closed it out around about here ahead of the data. And see how we've stopped ahead of the major data and then reevaluate after the data has dropped. And so what we're doing, well, we're looking to push higher. Where have we pushed? Well, we've pushed to a resistance area. Next level is a little bit higher, so there might be some more legs in that if we can get to and break through the 117 area. So 117, big round number again. It's enough for many. And again, if you'd been trading this long this morning, many would have had a target around 117. You saw the data was enough to take us just shy of that. So some would have been pulling their stop losses, their target points down, or manually taking it out if they hadn't been manually taken out somewhere down here, but still in the money. And then if you take a step back from the data, just leave it running because it's long, as long as your stop loss isn't too short. So wait for this to finish. Let's just go. So 30 minutes. It's still not quite 30 minutes, so it's going to finish. So again, you could have your entry here and your stop loss below this level here. Ignore the volatility of the immediate data. So we have our stop loss through there at 116.82. We'd have got in at 116.94. It's a 12-point gap. So 12 points, at least 12 points from 116.94 will take us through that 117 level. So it's like a one-to-one risk reward to 117.06 if this trend continues, basically. So that's the way to be trading these trending markets. It's still, see here, it's still trending nicely. RSI nicely. It's question mark. Oh, we're in the overbought area. So this may be, 117 may be a step too far. So maybe it's time to have got out already. How far does this move on a 15? Well, it's 8 and a bit pips or 9 pips on a 30-minute basis. So there we go. But then we got the other extreme, the 4-hour trader. He would have gone long here, or they would have gone long this morning here on the 6 o'clock candle at 10 o'clock at 116.82, and then his stop loss would have been originally down here, but it's probably around about here now, around about the 20 period moving average there on the 4-hour trader, looking for highs. But you can see the resistance there is at 117.14, so that's a 4-hour resistance, and then there's another one a little bit lower than now, 117.10. So 117 maybe a step too far today, but obviously all dependent on what kicks out of Putin and Trump's discussions, because it could go either way, couldn't it? If he gives too much to Putin, the euro could come under pressure. Gives little to Putin, the euro could rally significantly. So across the board, not just against the dollar as well. So all to play for, all in place for later on. So it's difficult to say how next week will go, depending on obviously what happens with Trump and Putin later. This interesting reading from Michigan as well in an hour's time. So we'll have another look at that. But for next week, really, it is Much quieter. The key event next week is the start of the Jackson Hole conference, but we've also got the minutes from the previous meeting. Remember the minutes from the Fed previous meeting. If I just put the filters on for the high impact events, five for next week. You can see the FOMC minutes are out on Wednesday. We got a rate decision from the RBNZ, likely to follow the RBA this week with a cut in interest rates of 25 basis points. So it's making the US even more of an outlier. Inflation from the UK, interesting to see what that looks like as well. But the FOMC minutes, remember we had those dissenters, Collins and Bowman, see what was actually said, what was actually documented in the minutes. So that'll be much more interesting reading than normal, or the last few minutes of the Fed have been next week. Obviously, lot of that caveat as depends what happens with Putin and Trump this afternoon or tonight, and then how Zelensky is brought into the fold. Is there a three-header, about us but not with us? It's just madness, madness, madness. Claims really strong again. Yes, last week weren't they? See those on Thursday. PMIs kick off as we get to the final week of the month. Standard and Poor's manufacturing and services PMIs on Thursday as well. German GDP, and then there's a speech by Powell. This is the start of the event in Jackson Hole. I don't know if it told you there. It's just a bit head of the Fed. Didn't say where it is, but Jackson Hole kicks off next week. It's a place in the wilds of Wyoming. It's all peaceful and quiet, and the world's greatest, great and the good within central banking and businesses are all there. And it's all a relaxed chat in the summertime in the Wyoming fields. Whether President Trump will be there, obviously not. What members of his cabinet, maybe. Who knows? We'll see next week. So take care, everyone. I'm going to leave you with a stronger euro following the retail sales data after initial spike lower. We're moving higher again, 116.97. So we're in 3 points of 117 if you're still long. Gold. So actually, we didn't go back to gold, did we, after the data? Gold. Big spike lower. Not quite as low as we got on CPI and PPI day, but it was quite a significant move lower. 333 there, all four threes. And we did try to move higher, but that 20-hour moving average is proving quite a sticky point at 3342 or 3348. 43, should we say, to the upside. So have a safe and peaceful weekend, everyone. It's payday today for those of you getting your funded accounts paid. We have some really big payments today. So congratulations, guys. Let me just put that up. Let me share it here on success stories on our Discord channel. Today, exclusively, there's a 30% discount to celebrate Indian Independence Day. So India 30 gets you a 30% discount. Here's Kumar with 9,400. There was another guy earlier. There's Brooch at 10,100, his biggest payout. We say it's the biggest payout from from the prop side. We're really, really proud of you guys. Well done. And data. Small beginnings. You can move on. It's all about process. Do the process. Do the scale your account. $200 is good as Brock was $10,000, so $300, $1,000 here from that's his second and third payout. There was a guy I saw this morning who's 10th and SK. He's based in the UK. This is his 10th, and I think I made a comment, didn't I? Yeah, 9 and 10. These are his ninth and 10th payouts. $1,000. Keep doing that every week. It's happy days, guys. So it's all about yourself. It's all about process. It's all about trading what you see, not what you think, and managing your emotions more than anything. So do come and join us. It's very, very simple to do that. To the website, theproptrade.com is us. We're as good as the bigger boys, and we're very open, very clear, very transparent. If you want to one step, that's called our Express Challenge. Prices. Oops, gone to sleep for some reason. Perhaps it is my internet. Yeah. No, there we are. You can get going with a little $5,000 account for less than $40 because if you put India, I think it was India 30, wasn't it? Yeah. Or was it Indian? It was Indian. Apply. There we are. Gets you less than $40, gives you a massive 30% discount. Obviously, bigger account, $25,000. That's the sort of account you want to be playing with. Less than $125. $125. You can find $125, guys. Gets you a massive $25,000 equity to play with. It's a one step. So you prove yourself making 12% on that account, not losing more than 4% on a daily basis, not risking more than 3% on any one particular trade idea. Total loss of 7% across the time of the challenge. Keep away from news trading, but if you want, it is allowed here with the Express challenge. Excuse me. Get your funded account. You've got to obviously no target. The rules are still the same. You've got bigger daily loss 5%, maximum loss of 10%, and 80% of all the winnings can be yours the following Friday, basically. So give it a go. Less than $125. This India 30, guys. Let me just read these, and don't keep asking the guys on the. I'm sure you will on the support desk about this, but it's only for today. It's special celebration of August the 15th. It's a significant day in many, many countries. So give it a go. 30% off today exclusively. Okay. All the best, everyone. Have a great weekend. Stay safe and keep cool. I know it's very, very hot in many, many parts of the world. All the best, everyone. See you soon. Take care.